Welcome everyone. I hope your weekend was great. Today I'm going to share with you on how I roll my leaps over with Sofi. We have to roll over our 20 strike price that expires the 15th of January 27 because we only have about 6 or so months left on this trade. Before we roll over our leaps, I always like to check the VIX. As long as the VIX is not too high and is staying somewhere around 15 to 18 levels, I have no problem. The reason why is if the VIX is elevated up here around 22 all the way up to 30, these premiums could be pretty expensive. And the other thing too I look at is the SPY. So we're over here on the 50-day moving average. It's doing okay. Okay, the 150 and the 200's way down here. So we're okay. We're staying within the Bolter band. And let's see what the share price is doing. The share price is not as elevated that I'm concerned with. So I should get a decent price. And we're within the 50-day moving average. And I also look at the MACD down here, and the black line is above the red line and is trying to break out here. So here's my account. As you can see here, January 15th, 2027 is our current leap. We have the 20s. There's a total of 71,000 interest. It's very high interest here. Dealing with Merrill Edge, you have to hit research to find your delta. We're dealing with a 53 delta. That means whenever the stock goes up by $1, all we're going to receive is 53 cents of that. We want to raise that 53 up to closer to 70. So let's go back to the option chain. Let's try June. So let's go ahead and hit our research. Okay, in our research here, we got a delta of 59. Okay, and look at the theta. It's not that bad. It's down to 0.007. So it's like 7 cents every day it loses value. This delta is close to 60. So let's go back to the option chain. So that's $4.28 for that option. So now let's go even further out. Let's try the January 28 option. Let's check the 20. Now the reason why I'm going after the 20 is look at the volume of 29,000 here. Okay, you get the highest volume at the $15 range, which is more pricier at $7.55. And yes, that's going to have a higher delta, but you got to pay up for that. So I'm going to stick with the 20, so it's more reasonable priced for me because I'm changing a 20 for a 20. So in this strike price, look at the delta. It's 65, guys. That means every dollar that the share price goes up, we capture 65 cents of that action. No more 53 cents. So this is the puppy that we're going to pick up. So let's get to our trade. We're back to our ordering form. We're going to sell to close 25 options. And the expiration date currently is for January 27 at the 20 strike price. And remember, it's a call option. Then we come down here, buy to open, 25. We're going to go with January. We're going to swing this thing for one whole year out. And then we click it right here, January 21st, 2028. Gives us plenty of time here. Our strike price is still going to be the same. We're not changing it. You can see down here it says a net bid ask price. I always like to go ahead and try to get this thing as cheap as possible. $290 in there. And then we go ahead and preview the order. Okay, this option is going to cost us $7,250. Now, with the commission of $32.50 and the 15-cent fee, it comes out to $72.82.65 for the trade. So we're going to click this and submit it. Congratulations, our order was executed at $2.95. We just had to go up an extra nickel. I hope you all understand why I rolled my leap over today with Sofi. You guys take care of yourselves out there. Until next time, this is Sonny. I'm out.